Hey traders, Jeff coming back to you with Full Throttle Traders. Today I want to take a few minutes and just walk you through one of the day trades that we took today. The key is proper entry, proper setup, and you have to obviously use the market as a relative strength or weakness indicator. So today we took a nice trade on AMD. Now the market took off against us pretty hard, but let me show you what the setup would look like here. Give me a sec. Okay, so let's take a look at the AMD stock. Now, there wasn't a lot that you could scan for in the gap list this morning because everything was very volatile. It was running inside of the day, choppy, spready, even in pre-market. So didn't have anything. There's actually two things I did. One thing I did have was TXN. Now, the problem with that, the gap was around 7.5% at the time. On the early trades, as we tell our room members, we take these more of scalp entries. We want to kind of get in, let it move a certain amount that's predetermined. We take our initial break-even target, and then we move down to a bigger run. So if you look at this TXN right over here, you're seeing this move here. Now, the interesting part about this on the daily chart was we had a lot of green bar to overcome. Now, it wasn't the next day, but the following day, we were gapping down when the market was gapping up. We were down below the support 2 level, 143.61. Plenty of void and room on the 65-minute chart and the daily chart. So we had good relative weakness. Now, the market's kind of running here now. So a lot of that relative weakness is still pretty poor. This is actually still pretty poor. Still pretty weak considering what the market's doing, but it's still weak overall. Just trying to hang on to that support level. But nonetheless, so we got into play right here, and I told the room members that if this thing actually comes back down, then we're going to get it. If you look at this market, you look at the stock, when I drew this line here, look what the market was doing right here. On that red bar down, the market had a green bar up. So we knew that the selling was beginning to come in from this. We were losing support. The selling was coming in from this big pent-up green bar the other day, right? So when you look at that, we saw a good opportunity to come on board, and the low here at the time was 143.38. As a matter of fact, it was a bit lower where we entered. So let's see where it went to. Let's make a little bigger chart here. 143.28. This was at 141. We got it at 142 by 143. I believe that was the 5-minute chart. 143 by 142 by 140 by 143. It was a very tight stop in that we were able to get in. Let's see if that was it right here. Yeah, right about in here. We didn't wait for the low of the day. We saw the green bar going in the market right here. So we entered right here under the 142 marker. We didn't want to go put our stop up here. It was just too distant, $2.65 away. So we used VWAP. We already had the clue relative weakness was there. We had a great gap into void, losing a lot of its power. So a lot of the red would come into the green would start selling. And then you can see we used VWAP as our stop point. And that was around 140 at the time, 142.68, so I just called it 143. So we got in here, 143, and we went down $1 pretty fast. So 142, 141, boom, we went break even. At this point, we covered our stock down here, right here, a part of it here, and then went break even on the back. So we made a nice chunk of change in here. The problem was the market took off back to the upside. It eventually wedged, but then it broke back down. And so ultimately, it didn't prove out. It's still weak overall considering what the market's doing right now, but it just didn't prove out long term. But we got a nice spank on that, and that's what we're looking for because a lot of these will go. We don't know what the market's going to do from minute to minute and bar by bar, but a lot of times when the market doesn't do anything radical against the direction you're going, this relative weakness will just continue to invite more sellers. And of course, the big green bar sellers coming in from the other day will take this down $5, $10. Now, typically, we're looking for about if you look at this, we're looking for about a 4-hour move. That would have been 137.91. I'm going to target at 148. We went down right into 141, a little bit underneath that. Didn't quite get there before the market turned. And then, of course, it's still weak, but it's still just kind of, subdued. The market's kind of lifting it here just a little bit. So when I go back to the play that we took off what I found later off of what this is more of liquid stocks. So I have a few stocks like Microsoft, Meta, Tesla, Amazon, and such, Apple. And I found AMD was holding pretty well. Now look at it now. The market's going back, it's pulling it back now. But before all this happened, I want to kind of bring you back to the point where we actually entered the stock. First thing I want to talk to you about is that look how clean these candles were. When that market took off to the downside, ADM didn't want any part of that. As a matter of fact, if I go back to this area, we had a buy setup here, kind of a high level or low level buy setup in here, but it's buy setup nonetheless. It was stronger than most stocks out there. SMH was doing okay early in the morning. And so we looked at this here. We drew a Fibonacci line from the open to the here. And I told the members that this VWAP, this magenta colored line in here, is coming in right at about, let's see here. What is that target? That was at 147. Okay. It's coming in right here about at the 50% breakdown. So you can see right in here, 50% was 92.63. We ended up getting at 92.60 on the initial move down. Went down to 62 and then 92.60 right in here. We got on board. So you can see right here, 58. This was only down to 47. So we're only about 15 cents under entry at the low here. So when you have the right stock, and you can find the right setup, what we're looking for is the angle of retracement that's pulling back at a good sideways move. Not straight down. We want to see relative strength, but we also want to see clean trading or not so much overlapping, relative strength. And this is the key. The pullback angle is important. We want to see it to be bullish. We don't want to see it straight down, right? Because that sellers are whipping those buyers instantly. We don't want that. We want to see it hold at that angle. And there are very few stocks where you hold that angle there. So that's why we entered the trade. And then as you can see, as we kind of move forward in here, we actually added at 93.05. Boom, got it added here. So now we're $500 risk in the trade. Now the problem right here, the market took off south and it brought this back down. We actually made money. We sold some right into the pop here. This could have been an easy $1,500 play. We were up about $600 and we ended up about $106 up just because the market got spanked later on. And so we have no control over that. The bottom line is that was our entry right? Was the bars clean? Was it have relative strength or relative weakness, in this case, strength? How am I doing related to moving averages, the VWAP more specifically? This is the anchor VWAP down here. This is the actual VWAP in here. And how am I doing on the pullback? Am I getting past 50%? I'll do 61.8 at times based on if the market's dragging on it, but I never want to go down here. My stop is going to be closer to this area. Now, if the stop was at 92.13, I actually split the difference between the 75 bid and the 61.8, so I came in at 91.75. But once we started moving up here, I went break even on our average price entry, and again, made us by $106 in the stock. But again, we're going to make that $106 by running 1R, or we're going to make $1,500. That's how it is. But the whole key is that on a 500 risk, which is what this was, we never were more exposed than a $250 risk at the trade. So the market doesn't let you have your cake and eat it too very often, right? But when you get to the point where you can say, okay, when I lose $250, but when I win potentially $1,500. You do the math on that. That's about a 5-6 to 1 ratio on a Sharpe ratio. I mean that I could lose 5 more times in a row or up to 6 times in a row and still be break even on my trades. Now, we could have taken $600 off here, but that's all hindsight trading, right? I was up $600 right there. But little do we know the market's going to tank here $9 in the Qs. We'll go back and look at that in a second, actually, in the SPY. The SPY early on, if you look at this, you got spanked right here. So we were in this trade here fairly early, came back up to the top, and this is where the market got spanked right here. Again, wasn't expecting. Now, we're in high volatility right now. So we're getting these, 527, so $7.50 move very quickly. And that's what killed the trade. So even though we had relative strength in here, we were looking at this wedge that we drew in here that we were probably going to break out, right? It was more of an ascending triangle than it was a wedge. The higher lows were a little steeper. The average from yesterday's close was kind of honoring that trend line, looked like it was going to break higher. But lo and behold, the market does what it wants to do, and typically against you. So it broke lower, much lower. And we held on for as long as we could in a break even. But look ultimately what happened. The market did take off to the other side. So the key is finding trades like that. And a lot of these will come from that pent-up momentum that you're going to get in some of the gap lists, whether it's gapping down and retracing or gapping up and pulling back. The key is that you want to find stocks like this. You can put this on your take a picture and put it on your monitor. This is the type of buy you want to get in. Another key point when you're doing these type of pullbacks is that you can keep the stop relatively small, which means a 4 and 5R move is, if the market isn't coming against you, it's pretty easy to hit. They're not that hard. But when you're doing breakouts up here, you're going to stop down here. You're not going to get 4R. It's rare. But when I had a 75-cent stop here, it ended up being an 85-cent stop when you're on a 93 at the time, $93 stock. Those are the times that you can escalate off. And if the market holds it and it doesn't, kill your trade like this ultimately killed it after we got some money out of it, then you can get that spank higher. So that pullback allows you to tighten up that stop. So one small move up, and you're already at 2, 3, 4R pretty quick. The other point is, I'll leave you with this, is that you don't want to be going down north of 75%. Now, I typically don't use a stop here. I try to find a better stop based on the rate of change, how the market's doing, how the stock is doing. I like to come in around 61.8, maybe a little underneath that. In this case, because it was tightened up pretty tight here, we had a good retracement level here. I came in between 61.8 and 51. That was too tight for me. Although we would have done better if we had it in hindsight. It's only, 40-cent stop on it. That's hard, right? And you get stopped out pretty. So I want to give it a little bit of room. So I came in right about center, put it at 91.75. Now, the other point is, and as I go forward, I'll show you different trades that I do from time to time, is that you do want to be aware that I'm looking for trades that will, pull back here and still honor these Fibonacci levels, right? Ones that don't, I'm not as interested. It shows me that the sellers can be a lot more dominant there. I'm not interested in that nearly as much as I am one that's holding the line on these Fibonacci levels. So that's the key, is being aware of where you are in the fib. Is the stock strong? You can't control the market to take your stock down, but you can find these ones trading clean, going up the day. But the other thing is you want to have a void to the left. So again, I have a lot more to cover on these with you as time goes on, because every situation is a little bit differently. But this is a model that I look for when I'm going long in a stock. In this case, when I'm seeing relative weakness or relative strength in the stock, while trying to go long in the stock and find that precise entry. The last thing I'll tell you on this is that when you're doing a pullback entry on a limit order, trying to enter the trade, you obviously don't get slippage get in. You're going to get in where you get in. All limits fill pretty much, rarely you get a slip on that, right? So it'll fill you what your limit order is, as long as you have your limit order below the market, below the current price. So as it's pulling back in that area, sometimes it'll pull back within 2 cents, 5 cents. So what I have is, if I get back within a dime, 15 cents or so with that stock, what happens, I'll box my trade in. That's exactly what I did here. I had my original limit order set for 92.50 on the entry. It didn't hit there. It went back up to about 93.05. When it came back down to 80, I moved my entry up to 92.60. And here's the key. I left my stop the same, and I already figured out what my share size. So when I entered the trade, I entered for $250 risk. That was 333 shares on a 75-cent stop. You can do the math. But when I went back up into 92.60 on my entry, I had to move down to 294 shares, and then I added once I got in there, right? So here's the thing. I add when it's going in my favor. Why carry all the stock down to a stop if we have a stop out when I'm not even moving in that direction, right? So that's why I can keep my stop at $250 or half price of what my risk is. I'm never taking. So when I'm out of full loss, I'm never more than a half par. When I win, I'm between 1, 2, 3, 4, 5, and 6 times sharp ratio in this trade. So this is a product of doing this. It takes a little bit of practice, but once you get this down, these are the stocks that will pay, and they'll pay heavy. You don't have to be right a lot, when you do this, but when they pay heavy dividends. So hope this helps, guys. Jeff Yates at Full Throttle Traders. You can always come in, take a look at why we do this live. We do this for the first hour and a half in the morning, our early scalp trades, and we work into this, and we do credit spreads. We do some option plays as well throughout the day. You can take a look at this all, for free at our site there for a free trial. So hope to see you in the room. Talk to you soon.